Hello, everyone, and thank you for joining us today for our second installment in Accounting and Business Outsourcing webinar series. Today's webinar is titled How to Become a Results-Focused, Data-Driven Organization, and our presenters will cover how organizations can streamline their accounting functions to provide timely, accurate, and accessible data, which would help you establish solid financial goals. Before we begin with our presentation, and for those of you in the audience seeking continuing education credits, there are a few housekeeping items to go over. Everyone is in listen-only mode, and any questions should be typed into the questions section of the GoToWebinar platform. This webinar is eligible for 1 CPE credit. CPE participants are expected to provide a response in all surveys and polling questions. You will also need to be signed into the system for the full 50 minutes to qualify to receive your certification. Credit will be awarded based on the electronic record of the attendance. Certificates will be distributed via email within 7 business days following the conclusion of the webinar. And email certificates will be delivered from Simple Certificate email. Please be sure to check your spam folder if you don't receive your certificate when expected. Any questions related to CPE certificates can be sent to marketing@cricpa.com. PDF copies of presentation slides will be emailed to all participants within 24 hours following the webinar, and they are also available in the handouts section of GoToWebinar platform. And with that, I am excited to introduce to you an excellent panel of presenters that have wealth of knowledge in outsourced accounting area, which they will share with us today. First, we have Laura Ranger. She is a partner in our Melbourne, Florida office. She's a graduate of Lemoyne College. She served as a treasurer for multiple nonprofits. She has a black belt in karate, and in her spare time, she likes buying and selling antiques. Next, we'll have Brandon Gray. He is a partner in our Huntsville office. He's a graduate of University of North Alabama. He likes watching the Alabama Crimson Tides and enjoys speaking to athletic programs and going bass fishing. Our last presenter is Donna Bergeron from our Tallahassee, Florida office. She's a graduate of Florida State University. She's also a church youth leader for middle school girls. She likes hiking, kayaking, fishing, and anything that has to do with outdoors. Donna has a dog named Buddy and cat named Bashful. I am Deanna Dibben. I am the moderator for today. I'm a partner in the Nashville office. I'm a graduate of Belmont University. My family immigrated to the United States in mid-90s. I love to cook and try new restaurants, and I have a boxer named Tyson. Today's agenda includes Laura's input on how to keep books live and follow an established steady process where cash balances are updated daily and internal controls support data integrity. Brandon will talk about knowing your expected outcomes and importance of preparing 2-week cash forecast and updating it each week, and any other additional applicable forecasts and budgets on weekly basis. He will also discuss the benefits of dashboards for insight and collaboration. Finally, Donna will cover how to let your financial data drive your decisions, specifically the importance of having books closed and analytical financial reports distributed by the 5th of each month, and producing business segment reports that will show margin by line of business, location, customer, or any other identifiable segment. Laura, we are ready for your insight on how to produce living, breathing books.
Good morning, everyone. Living, breathing books. This is something that technology is going to help us move forward greatly. Technology is going to help us collect data transactions right as they happen. So that's live books. We're going to use technology to be efficient and consistent. And that's what you want your accounting records to be, is efficient and consistent. So collecting document data, using a sync with the accounting systems, recording and paying your vendor bills automatically, and raising sales invoices and collecting made easy. This is going to improve your processing controls with the use of technology. And the idea being is you link data. You don't summarize and rekey. The end result is living, breathing books. Electronic document collection is awesome. It allows you to access all of your accounting data anytime, anywhere. Paperless. The online system also allows you to link your documents right to transactions. No more filing cabinet. You can also fetch bank statements, loans, credit card statements automatically. No more waiting for them to come in the mail or logging in to download them from the websites. You can receive your bills from vendors as a PDF automatically. No more moving them from your inbox and goggling up your inbox with vendor bills or printing them or receiving them in the mail. They automatically come in right to your data collection system. This is my favorite, OCR. They take those bills, they read the bills, and they present you with a possible recording transaction. So no more typing on the computer. Just an OK button after you review it is all you need to do to record a transaction. Learned transactions. The systems allow you to help the accounting system learn how to post a transaction. So you can create rules which say, if this is the vendor, post here. These systems will also say, well, you posted it here last time, so is this correct? All of this will sync with the accounting system, so your transactions are posted as they come in, anytime, anywhere. The systems, since they're accessible anytime, anywhere, are accessible to managers, accountants, and bookkeepers. You can have a level of access as well. So managers would be able to see all the financial balance sheet income statement, where maybe your bookkeeper only needs to be in the vendor payables area. So there's a good segregation of duties and segregation of who can see what. Bank and credit card feeds. Oh, this is awesome. They come right through the bank every single day. No more waiting for those credit cards. It automatically looks by rules and presents a transaction to record. Bank transactions are also posted automatically, just like the credit cards. Vendor bills will be attached to the transaction. So if you have a reviewer that is looking at the bill to see whether they want to approve it, all they do is look at the bill and hit OK or reject. So this paperless product is great for draft invoices, and it also is embedded right in the accounting system. Revenue and expense tracking is also a great way to keep track of all of your departments or any specific category that you want to create. This system will sync with all other systems. Your accounting system is your core system. It will sync with other systems such as payroll, inventory, and whatever else you need. Vendor bills specifically. This is real-time processing. So your vendor bill will come in through an email. It'll automatically get posted. It'll automatically get put into a draft mode for someone to approve. It eliminates the need of mailing paper checks. The bill pay systems will either print checks and mail them for you, or they can do electronic payment transactions. Faster for the vendor, they love it, and it's lower processing costs than writing, typing checks, and going to find somebody to sign those checks. Bill pay system syncs with the accounting system, all in one. looks like we have a poll question. Deanna, could you run that off, please?
Yes, thank you. I will launch our first polling question. Please remember to receive CP credits. Participants must provide a response to all polling questions. The question is, which one of these is not an efficient accounting tool? Have syncing document storage transactions to the accounting system, utilizing a one-write system for writing checks, create bank feeds and bank rules, automate repeating invoice, and auto-send invoices. These are the topics that Laura covered. Laura, and while we wait for everyone to answer, could you please tell us, in your experience, what is the most challenging aspect to getting live books?
That's a great question. That's a question everybody asks. And it really is in the setup of the system. You really need to have somebody who knows all of these systems and how they work together. Because everybody knows the saying, garbage in, garbage out. Well, if you set it up wrong, it still doesn't work right. For example, if you set up a bank rule wrong and you keep using that bank rule because it was set up and now I just hit the OK button because this is really nice and easy, it doesn't mean your system is working correctly for you. So finding somebody who understands the systems and how they work to help you set it up and help you create bank rules and bank feeds, and then to periodically look to make sure the system is working as it should.
Thank you, Laura. I think we have most of the folks voted. I am going to close the poll and share results. We have 76% utilizing a one-write system for writing checks, which is the correct answer. Laura, you're next for raising sales invoices and collecting.
Yes, sales invoices are really important. They are the driver. You want to get that sales invoice out fast and you want to collect fast. The accounting systems now have customizable invoicing, put your logo on it. They have links inside embedded into the invoices so the customers can click and pay. They will be directly deposited into your bank account. So this is a nice, fast, quick way. And honestly, customers like it. If all they do is got to click and pay and it's all set up, they are more likely to pay faster. If a client pays you differently than your invoice, you can adjust invoices on the fly. Maybe they transposed a number, it's not worth going after. Really quick 3-button click to make sure that your AR is corrected. Repeating invoices are a godsend. A good example of this could be your rental invoices or HOA invoices where it's the same invoice every single month, or a association invoice where it's the same every quarter. You can create repeating invoices. They can automatically be emailed out to your clients or customers via email with that link in it to auto pay. Internal controls. These are really, really important. And a lot of these systems embedded in them has a great way for you to strengthen internal controls. Segregation of duty sometimes is so hard. There's a couple really cool ways to do this in the systems. You can create draft sales invoices or draft vendor bills to be approved. So the person who is creating it is not the person approving them. That's a great segregation of duties. You can pay vendor bills by authorized individuals only, so you can select who can authorize the bills. And if you need double approvals for either bills or checks to be written or double signs, that also is a great way to segregate your duties. Another way is outsource bookkeeping and accounting. If you have a third party doing your bookkeeping and accounting and they have the knowledge of that bookkeeping and accounting, you're more likely to get accurate records. Audit trails are available for all transactions. Even the document management system gives you a link to how that document came into your document management system. It was emailed from so-and-so or somebody scanned it in. So each transaction in the accounting records will also have an audit trail. And if someone changes a transaction, the audit trail will show who created it and who changed it. Auditors love this, and so will you. Now, trust. Trust is not a segregation of duties control. I'm not saying not to have trust in your employees. It's a great thing to have, but a true story. There was a bookkeeper who had been in a non-for-profit for 20 years. She was a great model employee. She got into a little financial difficulty and noticed that the AP vendor, their name was TPL. Her initials were TPI. Her OneWrite system that they were using allowed her to make, write the checks in the vendors, and they both looked exactly the same. After someone signed that check, she would take it and just change that I to an L. Well, the segregation of duties and the vendor pays in the systems that we have set up today could have caught that. Needless to say, unfortunately, she ended up with about $100,000 before somebody actually caught it. Got into the poll question. Deanna, can you try this one too?
Yes, we're ready for our next polling question. It is, what is an example of a strong internal control? Separate approvers of bills from those paying bills, outsourced bookkeeping and accounting, approved draft sale invoices prior to sending to customer, or all of the above. Give everyone a minute to respond to polling question. Laura, and while everybody is responding to that, in my experience, as you mentioned, having that collaborative accounting system that not only automates transactions, but it also saves time and increases accuracy and timeliness of data, which can be crucial, especially in current economic state. Now, what is your recommendation? Why outsourcing? What is your go-to when clients ask you that?
Outsourcing is a great way to do a lot of things. The first one being internal controls, which I just talked about, but the other is rotating bookkeepers. Many of you out there are finding it hard to find qualified bookkeepers. Well, if you outsource it to a company that does bookkeeping and accounting, they are responsible for replacing people as they come and go. And they hire, if that's their only job is bookkeeping and accounting, they will hire the right people and train them themselves. No more rotating bookkeepers, no more health insurance associated with it. Also, it creates consistency. We talked about garbage in, garbage out earlier. Well, if you have somebody who is really not a trained bookkeeper or only has a 2-year degree and not a lot of experience, then you may find out that even though these technological tools are awesome and they create live books, it doesn't mean the books are correct.
Thanks, Laura. And we've discussed some of that in our previous seminar, and continuity of, if you lose someone that's no longer on your team, kind of get to benefit of that as well. I'm going to go ahead and close the polling question and share the results with everyone. 88% answered all of the above, which is the correct answer. And we're going to move on to a final section of your presentation.
Thank you. So the end result, in all of the technology and the internal controls, you have efficient bookkeeping. You have consistent posting through rules and learning. You have timely information, which is oh so important for the managers of the organization. Internal controls are strengthened, and by utilizing technology, tools, procedures, and outsourced accounting, managers within the organization have the ability to use breathing, actionable data. Very, very important. This allows the managers to concentrate on the core mission of their organization and not trying to scramble to find out what the books look like or are they correct.
Thank you, Laura, for your time. Brandon, I'll turn it over to you to continue with your topic of knowing expected outcomes.
Thank you, Laura. Thank you, Deanna. So as a leader in your organization, how many times have you felt like this? You're not exactly sure where things are going. In particular, today we're going to talk about cash and where is cash going? Many times as you try to look into the future, it's a little bit of an unknown. Perhaps you know what profit looks like. Perhaps you have a good idea of what sales look like, but this moving target of cash seems to be a unicorn that you just can't put your hands on. And so what we're going to talk about today is how do we overcome this? How do we take this blindfold off so that as we're driving down the road, we can see where we're going? In doing so, we'll discuss why it's necessary. We'll talk about the data that you need to project cash, how you overcome the fears that your team may have in doing this for you, the best way to deliver that, and then a few next steps about what you can do with this process once you have tackled projecting cash. So why is it necessary? Many times as a leader in your organization, you need a heads up on the cash outlook. It allows you to make better decisions. Think about the number of times that you may have made a different decision had you have known what cash was going to look like in the next 2, 3, 4 weeks. It may have allowed you to speed up with an important decision when it came to hiring or moving forward with a sales initiative or making an investment in a business opportunity. At the same time, it may have also have allowed you to slow things down, and you might not have made that purchase if you had known, oh, cash is going to get really tight here in the next couple of weeks. We'll talk more about that here in just a moment. It allows you to be more proactive whenever it comes to making decisions. In the competitive environment that most folks operate today, you have to make decisions very quickly, and having data at your disposal, in particular cash flow and what that's going to look like, allows you to make decisions in a much more proactive manner. And then the last thing, as a leader in your organization, you probably have some gut sense as to where things are going. And in doing so, it's great whenever you get the data that affirms what you think is about to take place. And so as you start to project cash flow, it allows you to marry those two together, what I think is about to happen and what actually does happen. So you can establish somewhat of a rhythm to looking at your cash flow. So that being said, what do we need to do? What do we need in order to do this? What type of data is useful? Well, as we just discussed a moment ago, having up-to-date accounting data can really help you, in particular when you look at predicting cash flow. And so if you know what your current cash balance is, that's the starting point. And let me emphasize here, when I say current cash balance, that's not necessarily what online banking says. That is what your up-to-date check register says inside of your accounting system. Because the online banking is not going to account for outstanding deposits and outstanding checks, which can be very significant. So having the up-to-date accounting information allows you to know the starting point, which is what your current cash balance is. The next thing that's very beneficial is, what do you expect to collect? So for those of you who have businesses to where you issue an invoice, then you can look at your accounts receivable. And we'll talk a little bit more about this in just a second, but looking at that accounts receivable, you can start to predict, oh, I think this person's going to pay, this client will pay, we'll collect this invoice and what have you. For other folks who may not have that type of business, you're somewhat trying to project what collections are going to look like or what cash receipts. So how many folks you may be running by the cash register here in the next couple of weeks? What do you anticipate sales activity to look like from that front? So that's all about cash inflow. You also need to be able to have data around cash outflow. So things like accounts payable. Once again, if you have an up-to-date accounting system, then you're able to look at my payables, and that'll cover a majority of the expenses that you have upcoming. Won't cover all of them though, because there's things such as credit card payments that you need to be aware of. So what is my current credit card balance, and not getting caught off guard by, oh, wow, I got that credit card bill and it's a lot more than I thought. If you have up-to-date accounting data, you're able to look at that each week and know exactly what you owe. There's other things that may not hit your AP system, such as loan payments and what have you there. And then there are those things that happen very quickly, things like utility bills. Many times by the time they come in, they're almost due, and so they never hit the AP system. So you need to be able to track and kind of know, these are the expenses I have upcoming that may not be in accounts payable. Things that also like sales tax and any accrued payments that you may need to make. It's good to know what those are as well. For some companies, they use a line of credit to help with cash flow. And so knowing what that line of credit balance is, and more importantly, what the ceiling you may have on that line of credit, is really critical in being able to determine and know what resources I might have available to assist with future cash flow. So knowing that information is great, and you're probably thinking, well, okay, how am I going to get that information? What's the best way to go about retrieving it? So the first thing that I like to say is that history is your friend. As the investment commercials say, past performance is not indicative of future results. But I always like to add, it is the best indicator of where things are headed. So I like to use historical data as a benchmark. So in looking at that, some types of historical data that can help you in determining where things will be moving into the future, things like customer payment history. So back to what I was saying earlier about accounts receivable. If you look at your AR by client or by customer, you can start to see a rhythm as to when they pay. For example, company XYZ may always pay you on the second week of the month. That's just part of their accounting rhythm and system that they have. So regardless of what the terms may be on your invoice, you know it's going to come in the second week of the month. You may look at other customers and know they're always on that list of slow payers. And so we may have 30-day terms, but it really takes them closer to 60 days to pay. And so you have an idea of whenever they may be paying you. So look at your customer payment history from that perspective. If you don't have accounts receivable, one useful thing is to look at your data by the month or even similar times in the prior year. So for example, if you're a retail location, what do sales typically look like the second week in January? What do sales look like whenever it's back to school season? What do sales look like during the holiday season? Same week of the month from the prior year can sometimes be useful data there. So look back at history to help you in determining what inflow may look like. Use this same principle whenever it comes to outflow. So certain bills have standard bill payment dates. You're going to know, for example, that the credit card is always going to be paid on the 19th of the month. You will know that the loan payment is always paid on the 30th of the month. You'll know that sales tax is always due on the 20th of the month. And so knowing those standard bill payment dates can really help you as you project what cash flow may be outside of just your normal accounts payable. And then another thing I like to look at is I call a 30,000 foot view of your data. So looking at your cash balance in your cash register, what does it look like at a weekly level? So the first week of the month, for example, you may go back and as you're looking at history, realize first week of the month, I always have a higher cash balance. I've collected perhaps on a lot of receivables, or I've had an uptick in cash activity for the first week. And then by the second week, I'm having to run payroll. And then by the third week, I'm having to pay the credit card and make note payments. And so it kind of goes down. And then perhaps the fourth week of the month, it's the lowest, and then the cycle repeats itself. So go back and look at what your cash balances are over time for the same week of the month. And that'll be another clue to help you as we start to work to project what cash flow is going to look like moving forward. Deanna, I think it's time for a poll question.
All right, thank you, Brandon. I'm launching our third poll question. As a reminder, to receive CPE credits, participants must provide a response to all polling questions. This question states, which is necessary for projecting future cash balances? Expected collections, payroll costs, credit card payment, or all of the above? Please make your selections in the next 30 seconds or so. Brandon, as you mentioned, cash flow planning is extremely important for all organizations. And as discussed by you and in our previous webinar, assessing future cash flows using real-time and reliable data can help businesses survive during difficult times. Do you have anything to add to the importance of timely data?
Well, it's critical. You know, if you're going to look out of the windshield instead of the rear view mirror, you have to know where things are at today. And I've got many examples of clients that we've worked with who are making important business decisions, and they needed up-to-date information in order to look at not only where they are now, but to use that to help project where they're going. I had a software company that dealt with some Fortune 500 companies as their customers, and they were very fortunate, landed a really large contract. And on one hand, that was great because it was going to impact profitability in a very positive way. On the other hand, it was a little scary because this company that they were working with had terms that were 60 days. And so because they had up-to-date data and we also knew what we were expecting moving forward in terms of AR terms, we were able to help them as they met with their bank to project cash flow and give the bank compelling reasons as to why they needed an additional increase in their line of credit. And once the bank understood the situation, knew that their data was up to date, knew that their data was accurate, they were able to grant them that request, and it ended up working out very nicely for our client.
Thank you, Brendan. That was a great example. I'm gonna go ahead and close the question, and let's see, 97 I'm going to share the results. I apologize. 90% voted, and we have 97% selecting all of the above, which was a correct answer.
All right, so far we've talked about the feeling you may have as a leader in your organization of driving blindfolded and how we can start to overcome that. One of the best things we can do is to project future cash flows, where cash is going. We talked about why it's necessary to be able to make proactive decisions. We talked about some of the data that you need in order to do so, things like your current cash balance, which requires the up-to-date bookkeeping. We've talked about looking at the cash inflows, whether that's through receivables or projected sales. We've talked about cash outflows, things like accounts payable payments, credit cards, loans, those types of things, and knowing what your line of credit balance looks like. We then talked about how history is your friend and how you can look at history to be a guide for where things are moving into the future. So once you've kind of now hopefully been sold perhaps on the need to have data that allows you to look at cash into the future, you're going to go to your accounting team and you're going to ask of them, okay, this is great. I really want to take the blindfold off and I want to be able to see where I'm going. And by nature, most of us accountants, we might get a little uncomfortable whenever it comes to prediction. You know, we like to look at data, have the answers, everything reconciled and what have you. And so there could be a little bit of fear on your team whenever you go to them and ask them to help you with this information. So I want to spend just a few minutes kind of talking about how you can coach them through that and overcoming that fear. First of all, what I recommend is start with what you have and work to improve from there. So as you go to your team, you may not have all the data that you need the very first time you run this. Well, take what data you have and start there and then improve over time. And doing so, what you're going to find is that the accuracy of your data and your projection will get better. The more reps you have, the more times you do it. And so start with what you have and then continue to refine it. One of the best ways you can do this is kind of tracking and looking at your progress at here's my projected cash flow, and then look at whenever that time comes, whether that's a week into the future or 2 weeks or 3 weeks or 4 weeks, look and see what was the actual cash balance versus what I had projected it to be. And kind of keep that internal score so that you can improve your ability to project cash flow and say, oh, I missed it because I wasn't counting on this. Well, over time, as you keep score and what have you, you're going to improve the more reps that you get. Tell your team it's okay to practice. So go to your team and say, hey, you know, in a month, I want to be able to look at this data and I want us to start projecting cash flow. So here's the process to do so. Practice for the next 4 weeks. And work out some of the kinks, and that might give them a little bit of confidence, a few practice reps before they unveil it to yourself and maybe other team members. And then the last one here I think is really critical. Timely data is better than perfect data late. And you may not have all the information, once again, to be able to project, but if you can get close enough with what you have, go ahead and start running it. Go ahead and start the process. And then, as I said, over time, you'll improve your ability to project. You'll improve your ability in knowing what things to look for, but you got to start. And like I said, just a really big fan, because you're trying to make important decisions, of being able to have good enough data now to make that decision, as opposed to everything being perfect and it was 4 weeks late. So hopefully those are some things that will help your team overcome their fear of looking into the crystal ball and projecting cash. In doing so, many times we'll get questions from folks in terms of, well, what does this need to look like? What's the best delivery format? And so you've got an example here, and I realize on PowerPoint sometimes that can be a little difficult to see, but nonetheless, what many times we recommend is just use a very basic tool, something as simple as an Excel worksheet. That looks at what your beginning cash balance is today. Once again, that up-to-date accounting information. Then your projections of what you think you're going to collect or sell if you're more of a cash basis business over the next week. Then how much we're going to have in payouts, things such as our bills, our note payments, our credit cards, those types of things. So then if you know that data, you can project what you think your cash balance is going to be at the end of the week. And then you take that data and you apply it to the next week. So the cash balance at the end of this week becomes my beginning cash balance for the next week. And I wash, rinse, repeat the same thing. Feel free to take a template such as this and make it your own. We have clients who want to see very detailed information, so they may want to see, you know, all the invoices that we expect to pay over the next week. They may want to just see the high level of, oh yeah, you know, the reason why we're seeing such a substantial cash outflow is because we got payroll this week, or we got our credit card payment this week. So take it and adapt it and use it in a meaningful way to you. One other recommendation that I would make is on the delivery of this report. So have your team, as they deliver it to you, I highly recommend that they embed it into the body of an email. Now, it may be an Excel workbook or what have you, but try to get them to take a screenshot of that or copy and paste the information into the body of an email and then send you that email. Reason being is that as leaders in your organization, you're busy, you're on the go, you may be away from the office, and so many times you're looking at that data on your phone or your tablet, and it can be kind of difficult many times to open a workbook as an attachment and try to zoom in on it and see the data, whereas if it's in the body of an email, it's much easier to see and view. So that's just a little tip that may help you as you look at that. The last thing here when it comes to delivering this report is that it's really important that the report is delivered on the same day of the week each week. For example, it may be on Fridays that you're going to run the report. And reason being so that you know 2 weeks from now, 2 Fridays from now, what cash is going to look like. If you run it Friday this week and Tuesday the next and Monday the next, then you kind of can lose that sense of rhythm as to, because I'm always projecting as of a different day and time in the future. So if you keep it consistent as much as possible, same day of the week, each week, then that can also help reinforce what your feeling is and what you're projecting cash to be. And plus, it's an added benefit for whoever's preparing the report, and that as they go back and look at their accuracy, if they're running it the same day of the week, that can help as well there too. All right, so once you've really honed in on your ability to project cash, then you can apply this same technique to project other things in your business. Once again, it gets back to being able to make timely, proactive decisions. And so other drivers and things that you can use to forecast includes things like production. It can include projecting sales. A lot of organizations have what I call the sales cookbook to where you know I have to have certain amount of outbound calls, for example, in order to get X number of appointments, which will lead to X number of proposals and finally the sale. So in knowing that information, you can somewhat project, hey, if we didn't have enough outbound calls, X number of outbound calls over the last week, we're probably going to struggle to get to our sales target. So just using the same kind of information to project where things are going. Same thing with labor cost. That's one of the most significant costs in most organizations. And so you don't have to wait and have that surprise whenever payroll is ran of, oh, wow, we really had a high labor cost. Did we work a lot of overtime? What was going on? Well, use the data that you have to project what we think labor cost is going to look like. And then always have a forecast to actual. As I mentioned earlier, one of the most useful pieces of information you can have as you're preparing this report and looking into the future is grading yourself and knowing this is what I projected versus what actually happened. And the goal there is obviously just to improve your skill set. Last thing that I want to discuss is once you have up-to-date accounting information, and many times you can actually incorporate projections into this as well, is the use of dashboards. And I like looking at numbers, obviously being an accountant, but at the same time, I like a visual representation as well. And so using technology, things like the Zero accounting platform is a great example, and where I pulled some of this data here, is that you can start to look at dashboards to view information as well. So an example here is cash in and cash out. Just being able to look at this, once again, that historical information presented in a little bit of different format to see where things are going. Another one that I mentioned was using accounts receivable. Well, there's a dashboard to show you what AR looks like. And so you can look at the AR trend across time. And then one of my favorites is this account watch list. So as you're managing different expenses in the organization, once again, things that are going to impact cash, and you start to see an account get out of line from where it has historically ran or its trend, then you can start to ask questions around that. So just as an added benefit, many times it's really beneficial to have dashboards set up to review, to look at where things are at and look at those trends. And that's part of that historical data that can help you as you project things into the future. Deanna, I think we're ready for another poll question.
All right, thank you, Brandon. Our next polling question is, when projecting cash, which of the following is more beneficial? Customer's payment cycle or weekly profit? As a reminder for those of you that are seeking CPE credit, please take a moment and provide a response. And while everyone is doing that, Brendan, you provided great examples and steps for cash flow planning. Could you please highlight once again the importance of continuous or quick closing of books?
Yeah, that's one of those things that, as I was mentioning earlier, that's extremely important to make the best decisions. And if you can get the accounting team to work in a rhythm and to use technology and those kind of things that we were talking about a little bit earlier, then you can greatly increase the amount of time and the speed that they're able to close the books. A lot of times folks have gotten used to, unfortunately, receiving bad data 45 days late. And it's just really difficult as a leader in your organization to make a decision whenever, let's say we're December 10th now and you're looking at information from September or October. In most organizations, things have changed so rapidly to whereas if you're looking at data ending in November right now and it's the 10th of December, you can make decisions that will impact the outcome of December. And in particular, as you're looking at cash flow, especially during difficult times, if you've got a projected cash flow that's using up-to-date information, then I might need to have a conversation with a vendor. I might need to have a conversation with a customer or the bank in some cases because of what the cash flow looks like. And if I don't have up-to-date information that's quick, I can't have those conversations.
We have, thank you, Brendan. We have 86% voted. I will close our polling question and share the results with everyone. Brendan, everyone, 87% selected customers' payment cycle and 13% selected weekly profit. What are your thoughts on that?
Well, that's exactly right in terms of, don't get me wrong, I mean, profit is extremely important. It's right up there with oxygen. You got to have it. But when it comes to forecasting cash flow, profit and cash flow, you guys have all probably been in that situation to where the P&L report says I made one thing on paper, but there's something completely different in my bank account. Yeah. And so that's where that customer payment cycle starts to show itself, is there's a difference. Now that profit one will eventually catch up with you, but you got to know what that payment cycle looks like as you're projecting what cash flow is going to be.
Thank you, Brandon. Donna, we're ready for you to take over the final section of our presentation.
Okay, thank you. So we're suggesting setting a goal of producing financials by the 5th of the month or very close to that. Why would you try to do this? So for our clients, it's so that they can make those financial decisions internally. Some financial softwares provide that real-time data like Xero, and other softwares require more of a closeout monthly, whether that's allocation adjustments or inventory adjustments, AR and AP cleanup. For those that require these closeouts, they still need financial data so that they can use these in board meetings and making their corporate decisions. I have one client that I work on that it's so that they can do their bonus calculations. I often get calls as early as the 2nd of the month asking if the numbers are ready. So their reasons may vary for the client, and whatever that reason is, it's important to them, making it important to us. Clients love knowing what to expect. So when we have an agreement with them to produce reports by a certain time, then they know how to plan, whether that's for something as simple as a board meeting that they're having, or whether they're making important decisions. They can schedule these out and know what to expect because they know they're going to get their financials from us by a certain time. For us as their CPA advisors, we are able to produce timely information to help our clients make those good decisions, whether that's something as simple as those bonus calculations that they're after, or whether it's asset purchases or mergers or income and expense analysis. And at this time of the year, the most important thing going on is our tax planning. They need the accurate data in a timely fashion to be able to make these good decisions. It also gives us time to meet with our clients early in the month to help them determine if there's any concerns. So if they're not getting their financial data for September until October 31st, then they're missing out on opportunities to take corrective action for anything that may be discovered. Clients need to know if something is wrong immediately and not 30 to 45 days after the fact. We also need to teach our clients the importance of doing this review of their financials. Some are known to take that package that we produce for them and sit it on the side of their desk, and they don't bring it out and look at it until a bank may request copies of their financials. The more they understand and know about their business, the better off that they can make better decisions for their management. These financials that we're working on are not just your simple balance sheet and income statement. Financial statements can include, and often should include, comparative reports, whether that's month to month, quarter to quarter, year to year. This allows you to spot check for accounts that look out of line. Xero provides that rolling 12 months report, balance sheet and income statement, and that's proven extremely useful to our clients. You can also have reports in there that are by location, department, or business segment. Anything that you need to track to help you identify sections of your business that may not be performing as well as you would expect. And then also utilizing graphs. We have a number of our clients that love to see graphs. They're more visual minded, and it just kind of helps put a summary on a page for them. And oftentimes, once you have this stuff set up in your softwares, it's just a matter of producing them because you're using the templates that are set up. So having agreements with clients to get financials done early in the month also helps with scheduling. So I know that this webinar is geared to internal CRI staff as well as clients and existing or prospective clients. Sorry about that. So this is geared more toward our internal listeners. When you and the client have both agreed to a plan of action, and you have their cooperation to get that financial information to you, then you have an opportunity to schedule your staff to ensure that projects are covered, you're reducing downtimes, and you're also eliminating that bottlenecking that can often occur at the end of a period. My family knows that I do not take time off the first week of the month. I have clients that want their financials out the door, and as a general rule, I try my best to meet that for them. It's never perfect, it's never going to be perfect, but at least we have a planning goal. And when you have that planning goal in place, your staff is able to stay consistently busy without being overloaded. You've heard the expression of developing a rhythm. Once you and the client have that system in place, you'll find that this rhythm makes a world of difference, not only in the quality of work that you produce, but also in the timing. So is this really possible? Surprisingly, it is. We can close out clients monthly and produce financials very quickly. I have one client that we produce 60 pages of financials normally by the 3rd or the 4th of the month. Our agreement with them is by the 10th, but they push for it sooner because they're wanting their bonus calculations, as mentioned earlier. These are not basic financials. These are reports that include information by department, information by person. They are reviewing these in a timely manner to see what corrective action may need to be taken for those that may not be producing as well as expected. They're not our only client that we do this for. We have a number of clients that we produce financials for early in the month. They're definitely not all scheduled by the 5th of the month, normally staggered between the 5th and the 15th. But both the client and the staff assigned understand that if they do that, their own parts, develop that rhythm, as mentioned earlier, then this can be accomplished. So I think we have a polling question coming up.
Yes, thank you, Donna. Our next polling question would be launched momentarily. You should see that on your screen shortly. And it is, what is a reason completing financials early? It allows for timely advice and corrective action, supports important financial decisions, consistency in staff scheduling, or all of the above. Please remember to make selections if you are attending the seminar for CPE certificate. Answering polling question is required to get your credit. Donna, while everyone is answering the question, do you have an example that you could share with us where having financials completed early enough to be able to provide not only the timely, but also corrective actions for your client?
Yes, definitely. I have a medical practice that tracks all income and expenses by call center. There have been many times where we had produced their financials and given them to them, and they were able to notice and pick up on the fact that there were allocation adjustments that were done incorrectly. They knew this because they got the financial data early, and it was close enough to the month end for them to remember how that month worked. So we were able to go in and help them fix any allocation issues that they had in their software.
Great. We have 84% voted. I'm going to go ahead and close the polling question and share the results with everyone. 98% had answered all of the above, which is the correct answer. I'm going to move on to the next slide in your presentation, Donna.
Okay, so let's see if we get the slide up there. There we go. So how can we do this? This is only going to be possible if we are working together collaboratively with our clients. As mentioned before, seeing what those client expectations are and formulating a plan of action. With my clients, we have assigned tasks that we each know we're doing. I know that the data is going to be ready and posted, and they're going to send me reports over. And I often work ahead. I jump into their software to see if there's anything that looks concerning, so that I can go ahead and ask them any questions. They know that if they don't provide me with their information in a timely manner, then I can't produce financials in a timely manner, and they definitely don't want that. So the more automated our processes are, the better. Working with whatever software is needed, using those pre-existing templates when available, and utilizing as much client involvement as possible. All of our businesses are different, and we have to tweak our processes as such and find out what methods work for each of them. Having those responsible for day-to-day operations, whether that's our CRI staff or whether that's client personnel, properly trained, allows us to do that review level work as opposed to manual key punching, which we're desperately trying to get away from. This is critical, especially when you have staff changes within your client's organization. When we have those strong working relationships with our clients and their personnel, oftentimes we can step in and help with their back office work. We can fill in for that team member that's out on vacation or out sick, or if they've had just a turnover and somebody's been released. The client often asks us to help out with the issues and the concerns of separation of duties, and sometimes it's just different levels of difficulties that they can't handle internally. So once we have that agreement, once we have that relationship with our client, we are able to offer those types of services and help out in their times of need. I mentioned earlier about scheduling your staff. So if you have these client agreements in place, then we need to have staff, both CRI staff and client personnel assigned, available to tackle these projects. I highly recommend assigning clients to certain team members so that there's consistency and a relationship can be built between that team member and client. However, I also encourage having a backup plan and having those team members cross-trained. We are living in 2020, and we have to learn to expect the unexpected. So our clients should never suffer because we're having staffing issues. So having that backup plan is critical. When we have the client agreement in place, we know ahead of time what's expected, and we can work around vacations and even that unexpected sick leave. So I think we have one more polling question.
Yes, we have our final polling question. And it is, how can accurate financials be completed early? Generate reports from an accounting system without review. Accountants and clients work together collaboratively. Automating workflow and changing processes where needed. Or both B and C. Please take a few seconds to provide a response in order to receive your CPE credit for this hour. Donna, while everyone is taking a moment to answer the polling question, in your experience of providing meaningful and periodic financial analysis to clients, would you agree that sophistication of the accounting platform is irrelevant as long as it's set up to produce timely and relevant data needed? Could you elaborate on that just a little?
Yes. So there are many softwares out there, some that go into great detail and some that are a lot simpler. Some that have the live downloads like Xero, and others that require that month-end closeout like Sage. So finding out what the client needs are the most important thing you can do. I just signed on a nonprofit client, and they were using a very difficult accounting package. And when I asked them why, they didn't know. They didn't really even understand the package, and it wasn't being utilized to its capabilities. So we were able to step in and find out what their needs are, offer them a more suitable solution and a much easier solution to meet their needs. So the technical difficulties, the complexity of the software, that is definitely not as important as the product that you can produce, as long as it's relevant and timely.
Thank you, Donna. I have closed our polling, and we have 95% selecting B and C, which is a correct answer. And I think you have one final slide to go over.
Yes, so as you can see, it is possible to produce financials by the 5th of the month, or at least early on in the month, and to produce more than just that standard balance sheet and income statement. As mentioned before, we can dive deeper into different segments, such as reporting by department. I've seen this most frequently used in medical practices, where they're tracking income and expenses by doctor or nurse. Locations have been mainly used by the state allocations and locations there, but I've also seen it used in rental properties and businesses with multiple locations within the same area. And then product types. Product types can vary. We have a couple of clients that are using it to track retail sales versus installation versus service incomes. Anything you want to track can be tracked using these types of segment and tracking codes. Other softwares use the term dimensions. Sage Intacct uses this, but the more common tracking codes are classes and sub-accounts. The trick is to make sure that you're only tracking the level of detail needed and that you don't get lost in the weeds. I've seen clients use sub-accounts galore, and they did not set up the classes. And their reports, although they were very, very detailed, they did not give a clean picture of what they wanted to see. So it's often a combination of all of these products that is going to produce the best results for a client. It all goes back to getting with our clients, finding out what they need, and building a set of financials that can help them get what they need in a timely and useful manner to make those business decisions. So I think that's it, Deanna, for me.
Great. Thank you so much, Donna, Brandon, and Laura, for your time today. I would like to take a moment to remind everyone and invite to join for our upcoming webinars. Our next one is on January 14th, Accounting and Business Outsourcing Success Stories. That would be the final in the Accounting Outsourcing series. And another one on January 27th, Surviving in a Tough Economy, Cash Protection Strategies During an Economic Downturn. You can sign up for both of these events on our website. We would also like to let you know that CRI has a podcast called It Figures. This podcast was created to provide insight into the latest developments and regulations in the accounting and finance space. You can listen to It Figures on the CRI website and all major platforms. And finally, we'd love to connect with you on social media. You can find us on the networks listed with the handle of CRI CPA. Thank you everyone for your time today, and we look forward to hearing from you.